Good day, everyone. Good morning. And to those in China, good afternoon or good evening, and all the protocols observed. My name is Dr. Jaya Joshi. I am from the Zhejiang International Business School, Zhejiang University. And we are running this project jointly with the Nelson Mandela University from the Eastern Cape. I just recently, just this morning, had another meeting with a relationship between Zhejiang province and China and the Eastern Cape province district of Sarah Baartman Municipal District. So we can see there's lots of synergy between the Eastern Cape and Zhejiang province. This project, as you know, has begun following the COVID-19 pandemic, and then there was a consequent economic crisis, and that altered the global trade issues. And one of the big changes has been the shift towards digital payments. So with this shift, central bank digital currencies have become quite a big issue. And we've decided to propose a project to the National Institute of Humanities and Social Science to look at how the BRICS nations can use this to promote trade amongst the BRICS nations. And the CBDC, we felt, offers some opportunities to promote financial inclusion, to promote financial transactions. Currently, our study showed that although there is some relationship, it is skewed in favor of certain members of BRICS rather than others. And Professor Ronnie Kwadi and Nwabisa Kolisi will be giving us an idea about how this skewedness is actually the result of volatility in financial transactions, in using foreign exchange earnings. But to show this, that there is a certain relationship in trade that is perhaps a bit more nuanced and a bit more intense than we'd expected, Professor Yuan Dai will take us through how the multilateral trade relationships within BRICS can be organized into an index so we can have a better sense of what the trade relationships are. But all of this means that we need to have some kind of financial payment systems that can improve the trading relationships. And currently, we are very dependent on foreign exchanges such as the US dollar and the euro for trade within the BRICS countries because of the issues around trade. But because of the volatility, we find there is a problem. So we are suggesting an alternative system of payments. And although the system has not yet been developed, we have Professor David Wen, who is an expert on using and promoting platforms for payment systems and digital currencies. And he will give us a sense of how this system can be improved and how the system can be used for trade and transactions. It is not going to be a silver bullet. There are lots of challenges, which we also include in the report. We've already had some comments from Herbert Ponish, who was a former expert in the Bank of International Settlements, the BIS, and who's very much aware of this, and he highlighted some of the issues around that. So with these few words, I'd like to welcome all of you here, especially a special welcome to Orion Nimak and the National Institute people, to Paulo Rupino de Cunha from Brazil, and all the other persons who are attending this meeting. And I think it's about time we start now. And we'll call on perhaps Professor Ms. Orion Nimak to propose a welcome from the South African BRICS think tank, and she's the executive manager of BRICS and research there, and we'll give her the floor to give us a welcome. Welcome, Oriel, and we give you the floor to make a few words, say a few words.
Greetings, Dr. Prof. Josie. I myself aspire to no professorial ambitions, but Miss will do for now.
Okay.
Greetings, everybody. All protocols observed. I want to just touch upon three things briefly. Time, synergy, and objectives. And I don't want to detract from our speakers a lot of time slots today, and I would rather that more time is allotted to engagement of the possibilities that will be brought about today. I'm also cognizant of the vast differences in the time zones, and just want to say obrigado and cheer to all our participants across from Brazil to China. It's never easy, but it's worthwhile. So thank you to all who have joined us today. And synergy, something that I've had the pleasure of observing throughout the project admin, throughout being a fly on the wall before these workshop meetings start online. Rani, Jaya, Krish, you have synergy amongst yourselves with your project partners, and even in your communications to the SABTT and the NIHSS. And that is something that isn't commended enough, and I want to commend you again on that. So it's always a pleasure to watch you in action, colleagues. And on that note, synergy, the results that will be discussed today, the possibilities of the alternatives to be considered, and how these will be taken further. The resonance with the SABTT objectives to provide a platform for projects such as this that look at how we may deepen cooperation, how we may achieve the BRICS objectives, such as promoting economic development, removing or eradicating trade barriers. There are possibilities, there are alternatives, and yes, a space to still critique the skewed relationships that may occur within BRICS, and also find ways to level the playing field within and across. I'm seeing a lot of symmetry, if you will, between 1955 and 2022. And again, the possibilities that may unfold from Bandung to Bali in the coming weeks. And looking at what you've done with this project and seeing how it'll go forward and how it is a priority, not only for us as 5 countries, but across the global South and for the G20. Continue to find ways to deepen that cooperation, and thank you so much for your work. Thank you.
You're still on mute, Chair.
Thank you very much, Oriel. We welcome those complimentary comments you made, and we hope that we can continue with this kind of synergy, and we hope that we can be able to finalize the report and send it to you with all the recommendations as we've seen. Now I think we can go to the first, we've got most of the team members here. I see you and Dai has joined us, and David has joined us. Perhaps we can now call on Professor Ronnie Kwadi, who's going to do his presentation on testing the volatility of BRICS currencies and how that can be used for us to establish an exchange rate, possible of using the CBDC, central bank digital currencies, to integrate trade and economic exchanges among the BRICS countries. I want to make note here that next year South Africa will be hosting the BRICS, will be chairing the BRICS group of countries, and I think this report may be one of the things that could be presented for the recommendations to go forward to the BRICS think tank summit next year. Thank you very much. Ronnie, up to you.
Thanks, Chair. Thanks, Jaya, and thanks everyone that's here this morning. Without wasting any time, we just want to cut to the chase. I will be asking my colleague, Ms. Anne Kolisi, to take us through the introductory slides. Just from my side, just to say that this project is about looking at what is happening, what prompted the study, why are we here? And we look at the exchange rate volatility and how it impacts on trade and of course, the possible use of CBDCs to overcome the impact of exchange rate volatility. Many studies have, inconclusive results and mixed results. So we wanted to test this hypothesis on BRICS currencies. Now over to you, Mr. Kolisi, just to take us through the introductory slides, and we are coming later. Thank you.
Thank you, Prof. Mwadi. Good morning, colleagues. We'll be presenting on the impact of exchange rate volatility on BRICS countries. BRICS countries have been practicing an export-led growth strategies over the period of time, and they've opened their economies more than any other emerging economies. And it has been recognized that BRICS countries are all developing countries, but they possess distinctive, large, and fast-growing economies, and they strongly influence the regional as well as the global affairs. WTO points out that the 5 BRICS countries represent almost 3 billion people, which is about 43% of the world's population. These 5 BRICS countries together, they have recorded a nominal GDP of about 14.9 trillion of US dollar, which is about 25% of the world's GDP, and an estimated of 4 trillion US dollars consolidated foreign reserve. So, ladies and gentlemen, it can be said that BRICS countries have emerged as one of the powerful emerging economies. Then it comes to say, why concern about currency issues in BRICS countries? We know that exchange rate volatility have an impact on trade, and it brings instability in our economy. So it has been believed that BRICS economies will be larger than the G7. And also in the next 40 years, they'll be nearly half of the G7 countries' size. However, this imposes on producers the challenge of dealing with the source of foreign competitiveness. That is an additional to the productive conditions within each country in BRICS countries. And we do know that BRICS countries are heterogeneous in terms of the trade basket between these 5 countries. It has been believed that some of the BRICS countries have higher trade openness than the other BRICS countries, making access to their markets difficult. Thank you, Prof. Can I have this next slide? It is, as we've said earlier on, that volatility amongst BRICS countries exists. It then mentioned that risk-averse traders may have to choose to trade less to avoid any price uncertainty associated with exchange rate changes. This means that currency volatility may impede the flow of trade in BRICS countries. It is therefore believed that currencies' volatility may lead to suboptimal economic benefit accruing to BRICS countries. The figure above shows BRICS countries' currencies per US dollar daily. As it is evident on the above graph, we can see that the currency among the currencies of BRICS countries is volatile. So this then poses challenges in terms of trade flows, as we know that these 5 BRICS countries follow a different monetary policy. The objective of our study is to examine the exchange rate volatility on BRICS export volumes, as well as examining the exchange rate volatility on BRICS countries' import volumes. Therefore, the control variables are as follows: to examine the relationship between BRICS export volumes and inflation rates, as well as examining the relationship between BRICS import volumes and inflation, as well as to examine the relationship between BRICS export volumes and import tariffs. And lastly, the control variable as follows will be examining the relationship between BRICS import volumes and import tariffs. Therefore, we assume that the exchange rate volatility has a negative relationship with export volume, as well as it has a negative relationship with import volumes. We also assume that inflation rate, given that the 5 BRICS countries follow a different monetary policies, given that we say that the relationship between inflation rate and export volume in BRICS countries is negative, and we assume that there is a positive relationship between inflation and import volumes. And looking at import tariffs, which we assume that it has a negative relationship on export as well as negative relationship on import volume. To hypothesize, we say that there's no relationship between exchange rate volatility and exports or import volumes, as well as the alternative hypothesis is to say that there is a relationship between exchange rate volatility and export or import volume. And the now is that there's no relationship between inflation and export or import volume, and the alternative hypothesis is that there is a relationship between inflation and export or import volume, and the now and the alternative is to say there's no relationship between import tariff and export or import volumes, and the alternative is that there is a relationship between import tariff and export or import volumes. The study follows a quantitative research methodology by a use of an econometric exercise to analyze the data, where the study used the Gutch model to examine the exchange rate volatility on trade in BRICS countries, as well as the ARDL model, which is used to examine the impact of exchange rate volatility on export and imports in the long run and in the short run. Thank you, Prof. So the Gutch model follows the angle 1982, where the ARMA mean equation has an autoregressive condition hystereticity process, where we show it in the equation below. Thank you, Prof. So the Arch and the Gutch model estimation, we then decided that since the Arch model has shortcomings, we need to also utilize the ARDL model, given below. In this way, it has been believed that after we've assumed the Arch model, we then have to utilize the Gutch model to see the exchange rate volatility. In this way, the error term has a conditional variance that is a function of the magnitude of past errors. And the Gutch, therefore, thank you, Prof. We can move to the next slide, looking at the term. So the ARDL model follows the bound test to test for co-integration equation, and it has been shown by the equation below. So the parameters B2 up to B5 are the short-run multipliers. And we see that the alpha 1 up until alpha 4 are the long-run multipliers, meaning that we have to check the elasticity. And the change is defined as the first differential operator, T is the 10 trend, and the EYT is the natural logarithm of export and import volume. Then the white nose residual term is denoted by ET, which shows other variable that thought to influence exports. I will hand over to Professor Nwadi to present the empirical findings of the study. I thank you.
Thank you so much, my colleague. Is my mic on? All right, now, shortly and quickly, the results suggest the following, and that is that if you see the GASH model of the 5 countries, Brazil, Russia, India, China, and South Africa model 5, we notice that you'll see that all the GASH terms are positive and significant. The time varying volatility includes also a constant term. And of course, also its past errors. This means that the past values significantly predict the current values in all the above models. So it shows a persistent shock throughout the system, and the volatility shocks then are transmitted to the next period, and the next period, next period. So that impact is sending uncertainty in terms of what the exchange rate is going to be. And given the evidence of existence of volatility shocks, it is important to ascertain what impact does it have in BRICS trade. To test this hypothesis, then the GASH series were used in multivariate context using quarterly data covering period 1995 to 2020. And you apply then the ARDL econometric technique with exports and imports as dependent variables, and exchange rate volatility, inflation, and import tariffs as exogenous variables. And the ARDL results are presented. As you all know, we went through the Seychelles results. These are in our peak report. So what is the impact, which is the main crux of the matter today? Looking at Brazil, long run and short run, because ARDL splits gives you co-integration, we see that the shock is negative, in the long run is significant. But there's no short run dynamics there. The Russia, it has a positive on its export volumes, and is also statistically significant. Again, no short run. India is got a minus, it's got a negative impact. However, in the short run, it has a positive impact on the volatility. And China, we see positive relationship here. South Africa again, in the long run, but in the short run, it has a negative impact on the export volumes in the short run. The next one shows us, sorry, the next slide shows that ARDL suggests that the exchange rate volatility has mixed effects on import volumes in BRICS countries. This suggests that the unpredictability of the exchange rate in BRICS countries is also transmitted on the import volumes as denoted by the mixed signs of the coefficients. Clearly, exchange rate volatility heightens the level of uncertainty in the economy, particularly in businesses that are most in import sector. I think I skipped a slide here, and that was on exports. Exports, it's minus as well. Russia is positive, and then China in the long run is positive in terms of exports. But in the short run, it has a dampening effect, meaning that export exchange rate volatility, it does have a negative impact or decelerates your exports in these countries. So what are the implications of these findings? The implications are that the present ARDL results show that the exchange rate volatility has mixed effects on these countries, and therefore that suggests unpredictability of the exchange rate in the future, and it heightens a level of uncertainty. And the results align with our prior expectations in the case of Brazil, Russia, and China, as we hypothesized it in the long run, but only in the short run in the case of India and South Africa, in terms of our assumptions that we presented earlier on. And the results further suggest that the null hypothesis of no relationship between import volumes and exchange rate volatility is rejected in favor of the alternative hypothesis in the case of Brazil, Russia, and India. the long run, and in South Africa, in the short run. So, but we fail to reject the now in the case of China in the long run, and in the short run, in South Africa in the long run only. And the economic results indicate that in most instances, the exchange rate volatility has a negative relationship with export volumes in BRICS. And similarly, there's a strong evidence that shows a negative relationship between exchange rate volatility and imports within BRICS countries. So evidence is quite overwhelming here. It can also be safely concluded, therefore, that the exchange rate uncertainty impacts negatively generally on trade within the BRICS economies. And this threatens, therefore, the consolidation and the enhancement of cooperation amongst the BRICS countries through trade. We thus recommend alternative and more stable forms of international finance to facilitate trade in these countries. And we hope that, and we are of the view that the use of digital currencies will in some way go a long way to address the shortcomings posed to BRICS countries by use of conventional exchange rate system. With that, I would like to conclude our presentation. Thank you. Over to you, Chair.
Thank you very much, Professor Nkwadi. Professor Nkwadi, Ronnie Nkwadi, is the director of the School of Economics, Development and Tourism at Nelson Mandela University, and his specializations are in public finance, international finance, labor markets, macroeconomics, and development economics. Rabisa Kolisi is a PhD candidate in the Department of Economics at Nelson Mandela University, and she is working with Professor Nkwadi as a supervisor. So we will get reviews of all these papers, presentations, and the final report draft has been sent out to the discussants, and they, at the end of the presentations, they will give us an indication. I would now like to introduce you to Professor Yuan Dai, who's from Shaojiang University International Business School. She is an associate professor of economics at ZIBS, and she is a CFA charter holder and received a Doctor of Philosophy in Economics from the University of York in England. Her research interests include macroeconomics, international economics, and prior to joining ZIBS, Dr. Dai had extensive teaching and research experience in Australia, the United States, and the United Kingdom, and China. So she will talk about the possibility of developing a comprehensive multilateral trade integration index within BRICS, and she will use what is known as a network approach. Over to you, Professor Dai.
Thanks, Professor Jaya, for the very warm welcome and introduction. And also thank to those online who also participated in our conference back in April. And last time I talked about the trade integration in the BRICS at the bilateral level and also intra-BRICS regional level. Today, I will focus more on multilateral trade integration in the BRICS with a network approach. By the way, this is my email address, just in case you have some questions, please feel free to get in touch with me. Okay, so first some background on network anatomy. So a network is a set of points called nodes, like the green bubble here, right? With some connections between them called links, some linkage like this. So in terms of BRICS trade network, we have 5 nodes. Brazil, Russia, India, China, and South Africa. So 5 nodes here, and their linkages are the bilateral trade linkage between each of them. So for example, in this ideal world, we have the star-shaped configuration. So in which case, each country are connected with the other countries. Like here, South Africa, SA stands for South Africa, is connected to China, India, Russia, and Brazil. And China, where I'm located right now, is connected with India, Russia, Brazil, and South Africa. So this is the ideal world where each of them is connected with each other. So in order to quantify or to do it more rigorously, I use the network approach to study the multilateral trade integration in the BRICS. There are 3 dimensions in the analysis. First, the network centrality. Second, the network density. And the third, the network transitivity. So the first dimension is on network centrality, which measures whether there's a center of gravity in the BRICS, among the 5 BRICS nations. In other words, whether there's a core periphery structure. For example, South Africa might be the core, the other countries might be the periphery. Okay, so just like that, like in the trade literature. The second dimension is on network density, which measures the extent of global integration. And the third dimension is on network transitivity, which measures the extent of multilateralism. So for the first dimension on network centrality, I followed the Freeman paper and the methodology in the Freeman 1977 paper. And for the second dimension on network density, I followed the methodology in recent Kelly 2007 paper, which was published in the Journal of International Business Studies. And for the third dimension of on network transitivity, I followed the methodology in Words and Struggles 1998 paper. So here's a brief summary of the results of the BRICS trade network analysis. The top table is for exports network, and the lower table here is for imports network. So here, same as the previous page, the introduction one, on the overview one, the 3-dimension network centralization, network density, and network transitivity. Here I look at 3 years across 5 with 5 years in between, 2010, 2015, and 2020, the more recent one. And here I used like 3 different thresholds. So here threshold means like what I consider to be meaningful trade to like the critical level. So like here is like 0.5%, the bilateral level as a percentage of their total trade with the rest of the world. So here is the first one threshold 0.5%, the second threshold is 1%, and the third threshold is 1.5%. So with the tolerance level goes up, it means like fewer and fewer like possibility will be counted as meaningful trade. So here the first one here, first dimension for network centrality. Here, should I admit that person? Okay, so here we can see that like across the years and across different threshold, it's like 26% in 2010, and across the year, the maximum maybe like 33%. That's for exports, and for imports like 30-some%. So overall, like out of 100%, the degree of centralization is not that high. So here we have to conclude that based on the network centrality results, we do not find evidence on the existence of center of gravity, that is core and the periphery structure in the BRICS trade network. Okay, the second dimension on network density. Here we can see that as the trade network threshold increases from 0.5% to 1% to 1.5%, the maximum number of potential linkages decreases. And here, when threshold is 0.5%, the highest like 90%. But when the threshold is 1%, here the like only 65, and then when the threshold is 1.5%, here only like 45%. So the maximum number of potential links decreases for both the export and also for the import network. And the implication that trade integration measured this way increases much more at lower levels of trade. So it really depends on what threshold, like what kind of level of trade we consider to be meaningful trade. So it's like sensitive to the choice of the threshold. And the third dimension on network transitivity, which measures the extent of multilateralism. Here we can see that when the threshold is low, it's like 87.5%. Relative speaking, compared with the imports, the export one is relatively high. But there's still like nowhere we can see like above 90%, which we consider to be like high multilateralism. So in that sense, there's still like potential for further trade integration in the among the 5 BRICS nations. And next to visualize our results. to visualize our results, I use the topology to draw the network, to do some further network analysis among the 5 nations. So here use the threshold equals to 0.5% as an illustration across 3 years, 2010 on the left, 2015 in the middle, and 2020 on the right. As we can see that the shape of the trade, the export network among the BRICS evolved over time, over the past 10 years or so. So here, the size of the node represent like how much trade it has with other nations in the network. As we can see, the largest node is China here, and India probably of similar size, and in 2010. And then in 2015, I think China, Brazil, China, South Africa, and Brazil have similar shape, similar size of the node. And in 2020, China and India still, again, have the largest nodes in the network in terms of the volume of their trade. And in terms of linkages, here again, back in the left panel, China is well connected to all 4 nations, like to Brazil, to Russia, to India, and to Russia, and to South Africa. But for example, South Africa is connected with Brazil, China, and India, but not directly with Russia, which calls for potential for like further trade opportunity or integration here. And then if we move here to the middle panel in 2015, we have, again, China is connected to Brazil, Russia, India, and South Africa. So India is connected to like China, South Africa, Brazil, but not directly with Russia, have to like go through the other nodes. Again, there's seems that there's some gap here, and also calls for the opportunity for further trade integration. And we do the same exercise for like in 2020 as well. And then if we increase the threshold to 1%, which means that we increase our tolerance for what we consider to be meaningful trade. And on the left-hand side, we can see that for 2010, again, China and India have the largest nodes. And here, if we increase the threshold, Brazil kind of isolated from the rest of the four economies. And then we can see that the trade pattern, the linkages also evolve over time, and then to 2020 on different shape. But again, here we can see that Russia and South Africa are still not connected with a higher threshold any more recent year, which again for the potential for trade opportunity integration here at the bilateral level and also regional level. So what can we do? There are like at least two possible policy implication we can draw from the econometric exercise here. The first one is to have like regional trade agreement among the 5 nations, Brazil, Russia, China, India, China, and South Africa, similar to the RCEP, the Regional Comprehensive Economic Partnership, the RCEP that was just put into effect early this year. So that's like the first possible policy option. And the second option is to adopt a central bank digital currency, CBDC, which my colleagues David Wen and Krish will talk more about in their presentation. So now that's it for my part. I will pass the floor to my colleague, Professor David Wen, who is in Hangzhou right now. Thanks.
Thank you very much, Yuan Dai, for your very interesting and clear presentation. We will now call upon Professor Wen Hu, or David Wen, as he is known internationally. Professor David Wen is a professor at ZIBS, and as well as a computer science in the Computer Science School of Zhejiang University. He co-founded the first CBDC company called eCurrency in 2011, working for financial inclusion in Africa and Southeast Asia. He also worked as the US expert in ISO Technical Committee 68 for digital currency security and was elected chairman of the International Telecommunications Union. His focus group on digital fiat currencies, and he works with central banks and the telecom regulators from the People's Bank of China, as well as over 40 central banks around the world. He focuses on the concept of digital value, which would unify crypto, CBDC, NFT, data, and assets. So Professor Wenwu, Professor David, is just come back from the USA, where he did some training programs, and he is going to present some of his research on looking at. We had these two presentations from Professor Ronin Kwadi, who told us about the volatility within the BRICS issues because of the dependence on the foreign currencies, the use of the dollar, etc. And we had Professor Yuan Dai, who told us about the lack of cohesion in trade and transactions because of the transactions issue within the BRICS, and suggested that perhaps we should move over to trade agreements within BRICS, or improve the payment system by introducing central bank digital currencies. We now will get Professor Wenwu to talk about what is the central bank digital currencies and how can we use them within BRICS to perhaps overcome these two issues of multilateral trade and volatility, in order to have a greater integration within financial transactions within BRICS. Thank you. Over to you, Professor Wen.
Okay, thank you for the nice introduction, and also it was great that the previous presentation has kind of set the very accurate data, because economists have data reports, and but today we don't have CBDCs, so it's difficult to say, hey, how CBDC gonna change it, because we only have China has some testing CBDC used for domestic, but globally this is not there. And last time when we had the meeting, Christy was ahead of me, and he gave a very nice presentation of central bank digital currency definition and everything. So I don't know. So I won't go into details of what it is, because you will hear very clear and organized presentation from Christy. What I'm going to talk about is, I spent 2 weeks on the road, and I was in Hong Kong and in US, mostly. It's on the topic on the CBDC and how the whole ecosystem of people working on digital currency, not only central bank digital currency, but digital currency and decentralized financing used for the cross-border kind of trade and so on. So it's some of my updates, I would say, today I will present. So I don't have slides, and so I will just give you some update from what I talked last time. And so I attended a couple of meetings when I was in Washington, D.C., because it's the time where the IMF and the World Bank annual meeting. So I went to 1 or 2 of those meetings related to central bank digital currency. But I think, I have to say that people are still debating on this very fundamental concept. It's so that made me feel a little bit sad that people still debating on the need and all the basic things. There is no, I would say, consensus on this whole thing. But the good thing is that there is an initiative where all the central banks are signed on board to look into, develop, test, and look into CBDCs. They all know, but it's just they are uncertain its function in very much detail, right? So is it exactly like a cash? Is it more like, more, has a little bit more function than purely is a digitized cash? I gave a talk on the masterclass. It's a masterclass attended mostly by World Bank people from all over the country, and World Bank people. The understanding, I think, is that people still are uncertain how the CBDC is going to impact the banking industry and on the anonymity of, so the anonymity is one of the major issue that has been discussed. So I see we are still in the long way where all the countries will have a fully deployed CBDC solution, which will touch most, a large proportion of the economy. For example, in China, so I gave a talk to the CNY, and there was so much interest that I have to kind of cut short, because otherwise the other people's talk will not begin. Most of them are focused on privacy issues and offline payments and the impact to the existing banking system, and so on and so forth. And trading, cross-border on all these things has not, registered too much to this meeting that I attended. Although I think if you look at the BIS website in this month, in the past couple of months, a few reports related to, CBDC bridge, the project that in Hong Kong, in Singapore, and all of those projects has been published, I think, with a mixed kind of conclusion. That is, it's certainly something that is doable, and technically, because most of these projects are related to a few companies putting their technology together to see what's happening. But I think it lacks study, or I would say study and research in things that is not related to payments. Okay, so here then CBDC is treated as a payment, but there are many issues that are related to the cross-border and even the economies within the border. So I think we are still in the process of experimenting, and I think Jaya mentioned we have some comments, feedback from BIS colleagues that so the CBDC and cross-border payments or cross-border trade finance, which is some area that I was interested, will need a lot more studies in its impact and so on. So it's not a technology issue per se. So that's really what I got understanding where on this trip. When I went to Hong Kong, I met with some BIS Innovation Lab people that actually did this work, including the Hong Kong dollar and the stable coin. So in Hong Kong and Singapore, most of the work are related to how to not just treat the CBDC separately. Okay, CBDC as a payment, that's very good. Retail payment, cross-border payment, but really looking at the whole decentralized financing, even digital currency in other forms as a whole, how these things are going to fundamentally change everything together. So one of the conclusion I draw from this trip is that CBDC as a payment, it's a small part of the infrastructure of trade. Okay, so for example, BIS studied the new call for proposal, where they say, how do we support, small business finance using blockchain and all this other decentralized financing technology? And I think the understanding that what we're changing is not just the currency, the CBDC, the payments, but rather the ecosystem, or I would call a stacked protocol. So you have currency, you have payments, then you have settlement, you have trade finance. Okay, so all of these things should be looked together. So it's not a matter of changing the bank transfer, the SWIFT or whatnot into central bank kind of CBDC bridge network. You have to change, the settlement. So it's not a bilateral, the volatility. I mean, the first presenter mentioned the volatility. So because the trade, you are trading goods, right? You're trading goods, but the currency volatility are most likely the country's economic situation against, the US dollar or something. So that volatility really may not have as much relationship to the actual trade between the two countries, because these two countries may have a very stable trade because the economy is very stable, very compatible. So they should have a quite a stable trade whatsoever. But because all the individual currency, whether it's just today's banked money or central bank digital currency, it doesn't change the volatility in terms of foreign exchange. So that problem has not been solved. I recently had an interesting chat with one of the leading economists, and so we kind of come up with this idea where, when was the finance started? Well, it started when in a village where the people who wants to plant didn't have seeds, right? And then they needed some kind of things to give to the labor or the people who have cows or whatever to start the planting. To start the spring planting, and then they need the people later on to harvest. And in the end, when he gets all the grain, right, he can now sell that grain in the market and gets whatever he needs. So the whole system can be based on the whole, grain, the seeds, and the planting and harvesting and everything. This system can be all done using grain as a instrument for payments, instrument for finance, instrument for, for loan and everything. Because imagine, the seeds itself, they are grains. So treat the grain as a kind of money itself, right? Because you can use some grain to pay for, the laborer. And you say, okay, I'll give you, 100 kilo. And in the end, so the whole system can be financed using grain itself. So you can borrow the grain because the seed is there. If you borrow the grain, you can pay somebody using the grain for the labor. And then later on, you have a harvest, you can pay back using the grain. So the grain itself is what make the agriculture 1 year life cycle stable. So why is it that when we have two countries, bilateral or small group of countries trading things, and the currency of RAN or of Chinese yuan is all related to dollars, which changes very drastically because the Chinese one may be packed closer, but maybe South Africa is very much affected in some other politics or whatever. So this kind of volatility is introduced into the trading system and make it really unstable. So the idea that I have proposed is, why don't we use the goods itself that is being traded between the countries as the instrument. Of course, now we have the technology. So it used to be if you use the grain itself within the village, of course, it works perfectly. Okay, because everybody, is in a small distance. You can distribute, you can ship them, and people can eat it. But in the trade, it's very different, right? So we have to use digital technology like blockchain, decentralized finance, all these new financial tools to make sure we could actually rely on such a system where the instruments for both payments as well as for settlement and for trade finance is the goods themselves. If we have a very good technology way to anchor our trade, our settlement, and so on, then we will make the trade much more resistant to the volatility of the countries, of politics or whatever, because people still need whatever they need. China needed the minerals and whatever the agriculture products, and Africa needed Chinese TVs or cell phone and so on and so forth. So this way, I think we could avoid a lot of those volatility and the lack of opportunity. I mean, there's a lot of missed opportunity because you did not have US dollar, or the exchange rate was not in favor. Because now if I know how much I can sell in my local market, because we do need cell phone, or we need minerals, then this type of, I would say, goods-based, there is what I call SDR commodity, right? So it's an instrument that is legally and financially based on the value of the goods and its pricing, its market value, and all these intermediaries that can accurately measure its true value, regardless of how the other currencies are fluctuating. Obviously, this is quite an advanced topic, because I myself is not economist, but I'm just like people who probably did the Bitcoin or Ethereum. We're just coming here, solving problems. We look at the problems. We are not restricted by, what's the rules. That's what's the practice that maybe the central bank or BIS have been following. So we have to innovate. We have to think of new ways of meeting the needs of the trading partners. That's what I been working on right now. It's yes, there is all this volatility, but can we start something even small between two countries on some whitelisted things, and we can learn a lot, because this new way of cross-border trade will have impact on the currency, on the CBDC, on the settlement, and all of those regulations included. So it is my goal to put this type of architecture, this type of technology, and the business case. In fact, there's people who wants to use this new platform to do the trade, because they can get trade finance easier. They can settle with better, less fees being charged. That's where I think we would start to see how, this central bank digital currency as one of the first, digitized money form as a trigger that would trigger a complete change in how world trade may be, organized. And so that is what I have to report in this symposium. So thank you, and get back to our colleagues who will talk in more details about CBDC as well. Appreciate it.
Shall I go ahead?
Yes.
Yes.
Thank you, David. I hope we will be able to share some of the articles you wrote so that we can share it with people. And we will send you some of the comments that I received from Herbert Ponish from the BIS, and so that you will be able to incorporate it in your final report. Now we will have Chris Chetty, Mr. Chris Chetty, who is a PhD candidate at Nelson Mandela University, and he is currently a senior research manager at the Human Science Research Council. And he will present to us his part of the report, which looks at how we can use digital currencies as a way to promote financial inclusion of the unbanked and of those who have been excluded from the economy in general, especially the small and medium enterprises. And he will give us an idea of how this can happen. And he will also take us a little bit through some of the issues within central bank digital currencies or within digital currencies in general. And towards the end, we will look at some of the challenges that we faced with promoting central bank digital currencies and how we can perhaps promote other areas of cross-border trade within the BRICS countries, and to promote more financial integration and more economic integration within the BRICS. So, Chris Chetty, I would like to hand over to you to please give us your presentation.
Thank you, Dr. Josie. Good morning, everybody. It's my great honor for all of you to join us today, and for me to be able to share some of our findings that's come out of the study that we've been working on with our colleagues at the Zhejiang University. So my presentation, as Dr. Josie mentioned, I'm looking at the design principles that could be integrated into central bank digital currency policy. And here this is done so in a means so we can foster cross-border integration and trade, and then try and do this in a way that promotes inclusive economic development. We live in a world, I guess, that faces many multiple crises today. But our world's social inequalities didn't begin in 2020 with the COVID pandemic. Rather, the pandemic's exacerbated what was an already bad situation. And so many nations were still compromised from the effects of the 2008 global financial crisis and in the collapse of the financial system at that stage. However, with the introduction of the global pandemic, we've seen an emergence of multiple crises linked to reduced production, failing supply chains, and repeating health emergencies. And so here in South Africa, like much of the developed world, we contend with an acceleration of poverty and unemployment. We're seeing great food shortages, in addition to the many health challenges that face the country. So the question that this really raises for me is, what can we do to break these systems of inefficiency and this perhaps the state of developmental paralysis that seems to be preventing any meaningful change from taking place? And so what we ask is then, is the central bank digital currency that radical innovation that we need in our financial system, considering that the current one is so slow, expensive, and exclusionary? And if we do promote the CBDC system, how do we do so in a way that promotes the needs of the excluded population, and so that they are represented as we develop this new technology? So with those points in mind, if we're looking at the central bank digital currency, or the CBDC, as that means or that path to achieve inclusion, we need to ask what will make this happen. So we're seeing that the CBDC idea is growing rapidly across the world. In the BRICS, each country in the BRICS is engaged in testing some sort of CBDC option. South Africa, for example, has Project Coca. And this is looking at how the South African Reserve Bank could be implementing distributed ledger technologies that is built upon the Ethereum platform. However, most of our efforts are concentrating on national priorities and the technicalities of development. So critically, cross-border integration, it's going to be crucial for our inclusion, And if we can create opportunities for, let's say, person-to-person trade, we would then also be able to grow our economy. So what should be done to enable cross-border integration and trade? That's the first big question we ask. And then how will this system differ from the past payments infrastructures that we've had to contend with? And it's also crucial that we try and integrate cross-border considerations at this stage before one entrenches our current exclusionary and perhaps inefficient processes into the system. So an early focus on integration will lead to substantial long-term benefits for the BRICS. And secondly, given our array of social crises affecting all our countries, there's a need for us to really center inclusive principles into the design of the system from the start, so that we then can benefit the and the underbanked. It's also important to understand that there are two main types of CBDC models which have emerged. One is for the retail market, and the other is for the wholesale. The retail model is based on the central bank issuing the currency, digitally speaking, directly to the public, where consumers own a digital CBDC wallet. And then this CBDC model allows the individual to directly transact with their peer with their transactions recorded on a general ledger without the need for a banking intermediary. So this model supports a high volume of low value transactions. The wholesale model, on the other hand, it exists at the national and the institutional level, and it's set up to allow the big banks to support transactions among themselves. And so in this instant here, the central bank generally acts as that domestic counterparty to such transactions, and it can be used as an interbank system which supports cross-border payments. This system focuses then on enabling a low volume of high-value transactions. So it is possible for these models to coexist, but the structures that I speak to concentrate mostly on the retail sector. The Bank for International Settlements also identifies 3 potential models for multiple CBDC systems, and that could facilitate international retail transactions. These are the compatible, the interlinked, and the integrated. And so in brief, we advocate for an adapted integrated model, recognizing that this was recommended by the Bank for International Settlements. So this model involves setting up a shared MCBDC bridge, which the central banks are onboarded to. The central banks, they agree to the rules of exchange and the underlying technical requirements for their respective CBDCs. And here the process of onboarding is much simpler because integration happens in one location and is not spread across every central bank as you might find in the interlinked model. The downside to the system is that it requires central banks to relinquish some control over the governance arrangements and the infrastructure decisions implemented in the system. And so that relinquishing of control is the problematic area. It's the sticky point in these negotiations, as the issues of governance and the resilience of your system is really foundational to the stability of your country's economic and financial system. One method to address this issue about relinquishing control is by unbundling the technology stack, which is used in the CBDC bridging platform. The Monetary Authority of Singapore looked at this problem, and they propose unbundling, which involves separating the traditional responsibilities of the central bank from their act of exchange. So in this instance, the bridge or the common platform, which you see here as the black block, could be shared by the BRICS. And so that bridge, or whoever the entity responsible for the bridge, they take responsibility for the application of exchange. And then the central banks have a choice in how it manages the domestic controls, which are traditionally carried out by the central bank, which relate to issues of managing governance and risk management as well. So your central banks then design their own CBDCs, the color blocks which are going across, in a way which can interface with the exchange application. And so this exchange application could either be shared by all participating countries, which you see through the gray block, or the country could develop its own application which interfaces with the bridging platform. And so The shared bridging platform also then supports speed. It allows countries to immediately pay each other directly without some sort of costly intermediary corresponding banks which are involved in the chain. And so your end users can then transact and then have access to payment systems using their country-specific CBDC wallets. So with that in mind, my first recommendation that I've made in the study was to share the MCBDC, the multi-CBDC regulatory and governance powers across the BRICS. And so here the governance model must share responsibilities between the central banks and that BRICS common bridging platform. And so this model must then allow the central bank to take responsibility for its domestic monetary policy, but also allow the central bank to act as a clearinghouse for cross-border transactions. And lastly, the bridging platform must manage exchange rate conversion and general communication protocols which are needed to allow cross-border peer-to-peer transactions. With the overarching retail model designed, it's then important that we try and define the principles that the MCBDC and domestic CBDC models should adhere to. Firstly, through the retail CBDCs, the central bank provides the opportunity for non-bank institutions to offer new innovative financial products. With the central bank managing the risk and setting the rules for exchange centrally, it provides an opportunity to minimize retail banking intermediaries. And so these intermediaries tend to increase transaction fees. And by opening spaces for the public and perhaps non-bank services, that allows us to offer affordable services to the poor. And then you could have your fintech operators, they could utilize the technology framework to provide new services in a range of new ecosystems, which could be related to supply chains, healthcare, security, retail, and e-commerce, over and above just services in the financial sector. In addition, there's also been some advances in offline wallet technology that can allow end users to transact in areas with limited internet access. And so that technology opens up spaces for fintech, which were then affected previously by the internet barrier. However, it will also be key for the BRICS central banks to exchange knowledge and technology related to offline technology and future innovations that come down the line. And perhaps here we could also see open source technologies like what you defined in India, the India Stack Bundle. Perhaps that could be adapted, and then that could be offered to apply public identity, data, payment services which sit on top of the CBDC infrastructure. With respect to data privacy, when we introduced that CBDC, the central bank takes responsibility for the KYC, the Know Your Customer, and the AML, anti-money laundering, and perhaps other policy initiatives that are required by that country. And centralizing that role, what you find is trust then becomes integrated into the financial system and can then be shared across all the systems that connect to the CBDC infrastructure. Ultimately, trust is placed in the central bank who performs the verification checks. And although the CBDC will integrate identity data, the system should be developed in a manner which limits who has access to the identity data. So your third parties that don't need access to the data shouldn't have the opportunity to retrieve a person's data. Furthermore, though, those systems need to be designed in a manner which then ensures that all access and the usage of the identity data is done so transparently. Next, given the immense climate crisis which is facing the globe, central banks need to ensure that our financial systems do not further harm the environment, and therefore they should be designed in a way which does not add additional carbon into the environment. So here we're calling for a net zero based financial system. So even though presently that the central bank digital currency doesn't necessarily require the resource intensive data mining processes that you might find in the Bitcoin network, one might be unsure of how the resources might be consumed in future iterations of this technology. So as a design decision that's made at the outset, we call on the central banks to make a concerted effort to only procure and consume power from renewable energy sources when managing their currency exchange and verification activities. We believe that the early adoption of renewable energy will forefront the sustainable development agenda in the financial sector, and that will allow our central banks to act as positive role models for the sector as a whole. Next, the CBDC is a novel and disruptive technology, which could offer several different unforeseen innovative use cases. And so there's a need for us to continue researching possible use cases of the technology and the infrastructure and to find out how else it could be used to promote further social innovation and accelerate our mutual and inclusive economic growth. And so the influence of disrupting traditional systems could have widespread and unknown ramifications that might disintermediate several industries. And so here the BRICS central banks perhaps then could play a leading role in finding new social applications of the technology and innovation which could better society. And so by introducing knowledge and technology sharing arrangements between the BRICS central banks will allow them to quickly benefit from its collective insights. Such exchanges and sharing of knowledge is not immediately possible in the private sector, and this shows how important it is for the central banks to perhaps drive a social innovation agenda. So lastly, in light of these issues that I've just shared, the opportunities that I've spoke on, my second recommendations bundles all of these points together, where we call for the BRICS to support inclusive economic development principles when designing an integration plan for our central bank digital currencies. And so these principles, as I mentioned, they involve promoting financial inclusion and reducing transaction fees. Secondly, the CBDC integration model must promote platform interoperability and data privacy. We should also be supporting carbon neutrality. And we need to allow the platform to act perhaps as a launchpad for future innovations in other sectors. And where possible, the platform needs to minimize the number of retail banking intermediaries so that we can continue to try and reduce transaction fees. And all this needs to be done in a manner which continues to promote competition in the financial sector. Thank you, Chair. That's all from me. You're on mute.
Yeah, thank you very much, Mr. Chetty, for your very interesting presentation. Now it's my job to perhaps inform you of what the limitations of the study are, because there are several limitations. We had some of them expressed by Professor Wen, David Wen. Central banks, we must remember that at no BRICS summit did they ever promote using a central bank digital currency. It has never been a statement that we should promote trade through using central bank. Perhaps it was still early days then for this, but now that the central bank digital currencies have come to the fore, we need to look at it, and that is the main focus of what is the possibilities of us promoting a concept that has yet to reach fruition, that is yet to come to maturity. Because we know, and as Krisha said, and as we've followed in the report, countries like China have already established digital currency for use domestically within China called the yuan. And that is being used extensively in China. Many people, they've passed the pilot stage and they've now made it operational. And my friend from India has just joined us, and he will be able to attest that the e-rupee is also become a way for promoting transactions within India itself. And we know that in South Africa, there is an attempt to work on promoting a digital mechanism, and we already use e-wallets, etc. But the big problem is, how do we integrate the BRICS countries with trade? Currently, as you know, the BRICS countries prefer, and in trade among emerging economies, trade is promoted, is undertaken using the US dollar or the euro or some form of foreign exchange. Now, we know that in theory, that means the US dollar or the euro have to become a reserve currency and have to be used by other countries as well. But of course, in 1960, Robert Triffin raised the problem of what he called then the Triffin dilemma, or the paradox. That means the US dollar or the pound sterling or the euro have to be used extensively by other currencies, and that places a risk on the reserve currency itself, because, and we've seen that risk happened in the 2008 crisis, where the US dollar needs to be backed up by gold or by other standards in order to promote its value. But if it's being used by other countries as a form of value as well, it can lose its confidence. And we've seen the result of that in 2008 when the dollar plummeted. And we are seeing it currently in the current conflicts in Europe, when both the euro and the dollar are coming under extreme pressure because of the conflict in Europe. So China has now tried to internationalize its currency, and you have the renminbi, the RMB, which has become a reserve currency. But if China uses its reserve currencies also as a trading currency, it may fall into the same trap of the Triffin dilemma, which means it can also become caught up with a loss of confidence in its value, etc. So there may be other ways before we can finalize and come up with a firm position on whether central bank digital currencies can become the means of payment to integrate financial transactions across the BRICS. There may be other ways, and Professor Yuan Dai suggested perhaps a free trade arrangement within BRICS in the same way that you have it within the Shanghai Cooperation Agreement countries. Or you can have a use of own currencies, which currently is being used, where Russia is trading with China and Russia is trading with India using their own currencies. And this is a means of operating and trading without having to depend on a foreign exchange currency to be able to trade, which will make you vulnerable to all sorts of volatility. So that may be an option for us to consider as well. And the final issue that we probably need to look at is whether in our recommendations we can suggest that BRICS set up a working group to look at how promoting a digital currency for transaction payments across BRICS countries may be able to help with overcoming the vulnerability issues, and which may be able to promote the integration of trade within the BRICS countries, so that we can finally be able to make the BRICS and perhaps other emerging economies, because I'm told currently now there are other countries who are wanting to join the BRICS because they see the stability within the BRICS countries. You have Saudi Arabia, Turkey, you have Indonesia, and this report, that project that we did make these recommendations to the T20, which is the think tank of the G20, and some of the recommendations we suggested were accepted by the T20. So that is a positive sign. And we will come up with some papers after this where we will be able to make suggestions. And in the final report, we will have some of the comments and criticisms and issues that were raised about the possibilities that we are suggesting. We'll incorporate those into the policy brief, and we'll now call on one of the discussants that has just arrived, Dr. Srinivas Yamadara. He was the official at the New Development Bank. The New Development Bank is also a means for us to consider how we can promote payment systems using the facilities such as a New Development Bank. And Dr. Yamadara is going to, Srinivas Yamadara is going to give us some input now in terms of how he sees the report that we've sent him, to look at the draft report and perhaps give us some comments. We had another commentary that came to us via email. We have a third commentary, but from Russia, but the person has not yet pitched up.
Prof. Yaredina is here with us.
Oh, she's here with us.
Yes.
Okay. So, and then we can have other comments from Alexis Meya and from somebody from Portugal, and we can then incorporate all these comments and reviews into our final report. So Srini, if you're online, you can come on board and you can make your presentation to us. Thank you.
Thanks, Professor Jaya, and good evening, good afternoon to every participant, depending upon the time zone. Hello, David, Ben, and hi, Krish. So it's really a pleasure to see you all, and I'm a little sorry due to a working day constraint, I could not spend more time in terms of participating to the whole discussion. But I'm really glad that the way the research has come out. In fact, I was wondering that how long it will take. A research of this magnitude generally involves a detailed amount of work, and it takes usually months even to conceptualize what exactly we are proposing, both as a problem statement and also as a recommendation and way forward. But I found the paper is extremely well articulated, both in the problem statement and also, as Professor Jaya was saying, about the Griffin dilemma, and the other recommendations as to how we can make it more effective in terms of using this research as a kind of a nudge to the policymakers in terms of using the CBDC as an option or as an additional tool for the purpose of trade integration. So to that extent, I commend and compliment the team members. And as far as my own profile is concerned, just a small correction. Yeah, I used to work in the New Development Bank, which is a BRICS bank established all by BRICS countries, we all know, between 2017 till about 2022. And our focus at that point in time, I was the heading the compliance department at that point in time. The focus was the initial setting up of the bank. So one important thing we also need to see the scope and objectives of the New Development Bank, and to what extent the NDB's role would fit into, say, for example, the topic that we're going to do. In the time when I was there, between 2017 to 22, the situation was quite different. At that point in time, the focus was not more in terms of inter-trade or inter-country trade or something, because the focus of the bank was more to do infrastructure financing to the member countries. And the key factor at that point is the bank is dependent upon the dollar financing. And based upon the dollar financing, the cost advantage that comes out of using the dollar source as a finance, that will be passed on to the member countries, and that would make the loans become much more economical when intermediated through the NDB. That was the whole idea. But the situation has changed dramatically since the time we all know the February 2022 and the sequence of the events that have happened since then. Then there is a kind of a stress in terms of how dollar can be reliably used as a kind of funding tool in a kind of stable mode. That's the question that has come up. So while the priority of the bank at that point in time was not, maybe this is a good time, though I am not the part of the bank at this moment. It is really a good advantage, and I also saw maybe Leslie was involved in these discussions earlier, and if he had, I think he could be the right person in terms of taking this as a tool for the financial management of the bank itself. Because our focus at that point in time was more in terms of the local financing. So take the money from the local markets and create a kind of a pool of resources that can be used for the purpose of financing the local infrastructure projects, which is again a kind of an isolated approach rather than an integrated approach, which to a certain extent we could do in China, because there was a good market for RMB, and we were able to raise the resources in RMB for the purpose of green finance, and we used those proceeds for the purpose of green finance projects in China. So that was like a kind of an isolated market, but not as a kind of an integrated market. But the importance of this integrated market has increased since the time February. And we have seen a lot of these, what you call international thinking, and also between the countries like Russia, India, and China, to start working on some of the projects that make us more focused in terms of this integration. How do we need to make this integration work? And I see the important challenge that is outlined in the report also. Basically, that without the trade integration, the possibility of using this integrated financial, say for example, new system for financial and monetary settlement between the countries will be very difficult. So the report has categorically and also with empirical data has categorically mentioned that. Now, in the absence of that, and while it takes time for us to get into the stage at which we need to be in terms of the inter-trade equilibrium, or maybe the beneficial way of like looking at the inter-trade, till the time that we reach out to that optimal stage, there are two ways in which we can take the experiences of the countries for the purpose of pushing this agenda forward. One is basically how China is trying to do a digital yuan project, for example, for the trade settlement across this Belt Road countries, across the BRA initiative, so that the settlement can happen. And to what extent we need to see the settlement can happen as a part of the trade transaction and not necessarily as a part of the reserve currency status. It is not about internationalizing, but there is a kind of a mechanism through which the infrastructure projects are financed by those entities which are involved in, say, for example, accepting the digital yuan as a kind of a primary mode, so that that entire infrastructure has to be created for the parties who are all involved. So putting them all into a kind of a platform in which the settlement can happen through electronic mode. So this is one way China has tried to do. So the contractors, the suppliers, or even the other entities which are in the process of the entire infrastructure saying come into a kind of a blockchain format and then try to settle this through the token that is the digital yuan token that is issued by the China. Now, the other way India is trying to do currently is not because the report has clearly brought out the differences of these stages of CBDCs development across the countries. While China is clearly the lead, India and still even for that matter, Brazil are taking a conceptualization stage, where South Africa's conceptualization is more towards wholesale. I think the retail thing is yet to come. But India has recently come out with a concept note on the digital rupee. But India's bigger challenge in terms of coming out with a digital rupee is the objectives of the digital rupee is not yet very clear, because India has got a instant payment system, settlement system, which is developed by the sovereign state itself, like the National Payment Clearing Corporation. Unlike in China, say, for example, the instant settlement and the payments have been initiated by the private sector players like Alipay and WeChat. But over a period of time, they were ordered by the PBOC to get into a kind of a clearing and settlement system through intra-bank mode. So then the Digi Yuan has come out by the PBOC. But in India, right from beginning, there was no private player who has taken the lead in terms of developing this UPI. You all have heard about it. The Unified Payment Interface, which made the entire transfer between entities and individuals in a fast-paced manner. So the second problem is basically the way in which each country is approaching the CBDC is completely different. While China has got a private-led player in taking the lead, then becoming a public-led infrastructure, India has got a public infrastructure itself, which has created the UPI as a fast payment tool. So now having that fast payment tool, the objective of the regulator is primarily to promote, say, for example, inward remittances from abroad. Basically, the people who are all NRIs, non-resident Indians situating other countries, and if they want to send the rupees to home country, can they use UPI, for example? But I don't think that the CBDC in, say, for example, its own formulation as a concept note that has come, will really get used in such a kind of a profound way as the plans for EU1 are taking shape and have been in the mainstream discourse. So to that extent, the time for the pacing of this country union may be going to take a kind of a challenge in terms of the timelines. So this is the second point. So first point is basically the trade integration. Second point is in terms of the pace between the countries is slow, or rather is uneven. I don't say slow, it is uneven. And third is basically the objectives for which the CBDCs are getting issued or are being experimented is completely different in terms of the reason why China might want a digital yuan, because that is primarily gets used also outside the country. There is a huge focus of digital yuan to get outside the country. But in the case of India, whether the digital rupee will be poised for and outside India transactions is still not very clear. So we need to be very clear in terms of understanding what the role CBDC might play in terms of an internationalization of rupee. We don't know to what extent that works. So that is the next challenge. One is uneven pace between the countries, and the purpose of the CBDCs between the countries being different. Now, having understood the challenges, I'll not take much time. Having understood these challenges, I like the proposal within the report that we need to constitute a kind of a working group. And the primary role of the working group, while these are the policy decisions. The policy decisions are in terms of making the trade integration work or the inter-country settlement through CBDCs might work. That are policy decisions. But most importantly, even I have mentioned in the previous workshop, apart from the policies, the important thing is also about the standards. So how do you create a standards of settlement, which is what the project MBridge's MCBDC is trying to take up. And considering the stage in which we are in, unlike other countries which are developed countries which have got the way in which they have to settle themselves is already standardized to a certain extent, and they only need to have interoperability between CBDCs as an object. Here we need to first of all bring these different countries' objectives to a particular uniform stage, and then we get into the interoperable stage. So to that extent, yes, there is a need for us to get into a kind of a working group. And again, we need to understand whether the working group would be better placed under NDB, because NDB, as I said, institutionally has got objectives which are slightly different from a monetary objective. But we have got another institution called as CRA, Contingency Reserve Arrangement, which the BRICS entities have anyway created. So whether we need to place it under NDB or it is under a Contingency Reserve Arrangement or any other form, because recent announcements from Russia in terms of working towards a kind of a BRICS coin are also getting momentum actually. So where do we need to place this working group is an important consideration for us. And then the standards that this working group can prescribe. And as we can see, people like Wen, who have already worked in terms of the ITU, and also they have been part and parcel of this BIS Innovation Hub, for example. So it is very important for us to see where exactly we want to place this working group and the direction in which this working group has to function. I think that is an important takeaway for us to consider and take it forward. So to sum up, the three challenges are well recognized: trade integration challenge, uneven pace, and also the need for purpose of the CBDs to be aligned. That is recognized. And the proposals are well accepted, which is very importantly for us to see to what extent we want to say, for example, constitute a working group and where it has to be housed. And depending upon the total scope and the constitution of the working group, the important purpose or the objective of the working group could be the standard setting more than the policy making part of it. The policy making, again, I just said, the first three things have to be sorted out. So those challenges, if we have to do it, it is neither under NDB nor under CRA. It could be some of these BRICS political forums actually, where these policy decisions could be further taken up. It could be a BRICS Central Banks Forum, or it could be a BRICS Finance Ministerial Forum, where these kind of things could be further taken up for the purpose of aligning in terms of the interest of the CBDCs. But this working group, which is going to operationalize this policy decisions that are taken and might come up with the CBD's practical uses, has to focus more in terms of the technical standards, which is what the BIS and say, for example, ITU has done. And that is where the contributions of this paper can be taken forward. And with this, I end my inputs and my interventions, and I thought that these are relevant and useful. While I look forward to engaging with other speakers and contributors also to make that these inputs are taken to consideration further. And this translates into a much more bigger exercise where we should be confident that some solutions can be worked out in the long run. Thanks, Jaya, for this opportunity. And thanks, David, and congratulations once again for the report.
Thank you very much, Dr. Srinivasan Yamadara. Sorry, I apologize for mixing up your what you call CV here, but we thought that that would be a very important point for you to make these comments. We will now go quickly to the next discussant, which is Professor Irina Yaregina from Russia. Professor Yaregina is from the Russian National Committee on BRICS Research. She is the chair for economics and banking at the International Institute of Energy Policy and Diplomacy under the Ministry for Foreign Affairs of the Russian Federation. She heads programs for the Financial University under the government of the Russian Federation. She is a member of the International Committee of the Association of Russian Banks, the working group of the State Duma of the Federal Assembly, and the dissertation councils of the Association Analytics. Professor Yaregina is also the head of the analytical department of the Eurasian Consortium and a board member of the research director of the National Committee on BRICS Research. Professor Yaregina, I'd like to hand over to you to get your comments. Thank you very much.
Thank you very much, Professor. First of all, I would like just to greet all our colleagues and to stress the point that we are just taking our measures and looking forward to having the digital currency that will be the only one for our cooperation as the currency of our country members and of all those who would like to join us. The thing is that the history of the consequent countries, the countries of the Central and Eastern Europe, of the Far East, of such as Vietnam, of the Middle East, and of Cuba have the historic background of using the currency that was mutual for these countries and served as the trade currency for the countries. And that was as the technical platform pronounced the International Bank for Cooperation as the main bank that just issued such kind of the currency. That's the intergovernmental financial institution that is still registered within the United Nations. But the thing is that actually dollar, euro, and some other currencies of the so-called developed countries are very risky at the moment, and it's just the time with the certain consideration of the historic background of the usage of this convertible currency, just to introduce the digital BRICS currency to practice. And it could be not only used within BRICS, but Eurasian Union is just with us and participates in financial and economic relations with BRICS and other developing countries. And they are also interested in just joining such kind of a platform. The thing is that we should have a kind of functioning rules that could be harmonious, the harmonization of the relations within functioning rules, operating and payment system approaches, and just the principles of supervision that should be also just harmonized to a certain extent. It's quite necessary for our cooperation, and it's quite important that such kind of the currency should be based on the background of the intergovernmental financial institution. It goes without saying that one of it is just the New Development Bank. There are a lot of other banks that participate in the process of the support of our financial entities. There are several banks also within the Eurasian Union, but the initiative is coming from us, and it's a kind of a research result of just the colleagues from South Africa, and it's very important and highly appreciated that it should be based on the New Development Bank, generally that have relations with different financial institutions who are have the corresponding banking relations with New Development Bank, and through the banks as the intermediaries, all settlements are passing by in different fields, and at the same time, while just putting into action our digital currency. We can just introduce the different programs of the co-branded multinational just cards and just some kind of the pay wallets techniques that can be also backed by the digital currency, starting from the private then relations, then corporate payments, then intergovernmental payments. As far as intergovernmental payments are concerned, on the basis of central banks of our countries, some specific and profound systems exist and or operates, but still the digital currency, the just single BRICS digital currency will help just to move forward while managing the currency risks at the moment, and will help us just to enlarge our financial relations. Only one mentioning is that it should be, goes without saying, and I quite agree with Professor Joya Josie, it should be backed by gold. And the central bankers will certainly discuss this, and I consider that the working group should give some kind of proposals. Another very small aspect that I would like to mention: yesterday we had the sitting of the group with representatives of the scientists and official institutions while discussing new initiatives in technological and innovative developments. And our colleagues from South Africa took part in it, and the report of Krish Chetty was highly appreciated, and we consider it as a kind of the introduction of the results of your research in the Russian Federation. Thank you very much for that. Thank you for the opportunity to speak. Thank you.
Thank you very much, Professor Yaragina. It was much appreciated. We appreciate your comments, and we will take them on board and try to integrate them into the final report. I'd like to now take the next few minutes to open the floor for discussion. We have some questions here. We have one question from Helder Sebastio. Perhaps, Helder, you want to raise your question and just give us a brief background of yourself for everyone to understand. So can you please put on your video and share your question with us?
Hi. So it's nice to be here and to hear these nice ideas. I have three questions. The first one, I suggested barter trading. Barter trading is to go back thousands of years. It needs complementary interests. And in my point of view, the most diversified economy and with the high-tech production will, in the long run, dominate the other BRICS. That's for sure. This is the course of David Rickard theorem of international trading. So I don't think it's a good idea. So we are talking about a monetary economy. So I don't think it's a good idea. Now, it was also suggested that different CBDCs, well, that will not resolve the exchange risk problem. That's for sure. And further, it is proposed that one central bank will control the settlement platform. Well, this means that that central bank will gain a dominant position in the system, and probably creating further differences between the other BRICS. And let's talk about one CBDC. So one CBDC means basically a monetary zone. And so you have the theorem of Mandel-Fleming. So one CBDC means fixed exchange rates between the BRICS. And I don't think that the other countries are able or willing to give up their independence of monetary policy. So these are the main issues here. And you have to see that for a monetary integration, some economic convergence must be met, as it has happened in the Eurozone. It's probably a good idea to think how this convergence can be achieved before advancing with just one CBDC. So several CBDCs may create a problem between central banks. So the platform I don't think that can be managed by just one central bank. That would be strange. So these are my 3 questions. Thank you.
Thank you very much, Helder. Very interesting positions. I really appreciate them. As we said in discussing the limitations, the CBDC is still a long way off. It's not yet a possibility, but what we're trying to address is some of the issues here. And as Srini has raised, there are some difficulties that we will face, but maybe Srini, you want to respond to some of this?
I think the alignment part, I don't think is now a kind of a challenge. It used to be a challenge maybe 1 or 2 years before. So there is an alignment in terms of the need for each of the country to have their a digital version of a central bank currency, and more so for settling it between the inter-country trade settlement. So for the alignment part of it, I don't see it as a challenge that is broadly there. And the recent initiatives and also the announcements from the leadership positions also is that, yeah, we all need to work on. So I don't see that alignment in terms of the political convergence. I don't see it as a challenge. What I see is basically, while we have an intention, there are roadblocks we need to cross. The roadblocks are basically, this is a innovation, in my opinion, which has come, but without any problem, which is first of all articulated. So CBDC has come as a kind of a response to some other developments happened elsewhere in the fintech innovation, and the central banks wanted to take charge of the situation and come out with the CBDC, but not exactly a kind of a problem that they are trying to sort it out. And that is the reason why we see a lot of objectives of the central banks in terms of why they need a kind of a CBDC, what is the appropriate design and all that is getting discussed. So while answer is basically that political convergence could be established in the recent announcements, the practical challenges first in terms of the objectives for which each country wants to do the CBDC is still not clear. And the second thing is whether the CBDC would be used for the purpose of internationalization and a cross-border. Maybe the countries like freely accepted currencies across the globe, if the countries like Singapore, countries like maybe US and Canada and all, if they come out with the digital versions of the central bank digital currencies, they may end up in having a kind of an cross-border usage of their digital currencies, but not countries like BRICS countries, which have not had a clear articulation about the internationalization of their currencies. So how do they, first of all, strategize their currency internationalization first? And where do they see the role of, say, for example, a CBDC in achieving that objective? I think that is the key challenge in terms of purpose specification. And second thing is, once the purpose is specified, whether the internationalization is a separate exercise that needs to be carried out. And third and the most important thing is the technology architecture. Because the technology architecture under which these things are getting worked are also completely different, because each country is conducting their own experimentation. So we should be thankful to, again, the BIS and the recent MCBDC project, which has got at least the interoperability standards that are coming up. But at the moment, the way the pilots are getting conducted and the way the models are getting designed in terms of the pilot projects, there is no convergence in terms of the technology standards. So if I were to put up in the pecking order theory, political conversation, we can take a kind of, there is a recent announcement. Second is the purpose specification. We need to see what is the purpose specification. Then internationalization. So what is the path for the internationalization in terms and the role the CBDC can play? And then comes the technical standards, which we need to work on. In this order, if we have to see, I think our task might become much more clearer. I hope it addresses some of your questions.
Well, yeah, so I understand the problem with the interoperationality between CBDCs. I was not talking about such technical things, but well, the idea is a CBDC, or how to implement CBDCs and how these CBDCs will work between BRICS. And I was basically raising economic questions, not technical ones as the interoperationality thing. I know that you are facing big problems there, but
I agree.
Yeah, that's it.
Okay, thank you, Elder. Sorry, go ahead, Srini.
Yeah, I'll take only 1 minute, because the reason why I said operationality is that if you were to see the success of the SWIFT, for example, SWIFT is not a kind of, the only story is not because of the fact that there is a monetary alignment or a policy alignment. The success of SWIFT, if somebody can go through, in fact, this is one thing we discussed in the previous workshop also. I am fascinated with the story of the SWIFT to the extent that the ability of SWIFT to come out with a standardization. I think that made the possibility of acceptance by everybody. And it has over a period of time evolved in getting this acceptance at every CIBOS conference, for example, the standards conference, and any kind of a patch comes. So what has happened effectively, whenever any other what you call competing innovation is coming up in other spheres, SWIFT was able to address them, including the current recent CBDC innovations also, SWIFT was able to absorb. So the most important for the success of this kind of a cross-border remittances, in my opinion, is more than political. How do you make the decision practically acceptable to the central banks and practically acceptable to the individual banks? And that is what the success story we should learn from SWIFT. While it has its own pitfalls, it has its own nuances for which we are trying to address a alternative solution. We all know that. But even to create a kind of a competing environment, we need to know what is the strength of that environment first. And the strength, in my opinion, lies in terms of the seamless way in which the standardization has occurred, and the ability of that standard to be easily integrated into the participants in the network. That has made the success story of the SWIFT much more pronounced and shorter.
Thank you, Srini, for that. I just want to also add, there is within the Shanghai Cooperation Agreement, the CIPS, which is the cross-border interbank payments, which was initiated by China and Russia. So the CIPS is trying to imitate the SWIFT program. But I'd like to take your question on the European Union. One of the big issues that made the euro a good mechanism was the political will that was in Europe at the time. But the most important point for the monetary union in Europe was the Deutschmark. The German Deutschmark, the strength of the German Deutschmark that could give the euro the boost that it needed. And I think that's what gave the European Union, and this was discussed extensively by Mandel, who talked extensively about the European Union and how the euro became a common currency. So in BRICS at this stage, we don't yet have the political will to be able to unite, but there are other issues that we can use currently, and one of the ways is using own currencies for trading and so on, because some of the issues, as our study has shown, is the trading, the economic integration through trade and financial transactions. But we'll take your points on board, Helder, and yours as well, Srini. I'd like to call on Alexis Abiyarameya to make some comments. He's from the Human Science Research Council, or was there. I'm not sure where he is now, but he wants to make some comments. Alexis, you can go ahead.
Thank you, Jaya. As you can see, I'm now at the University of Johannesburg.
Oh, good.
First of all, I want to thank all the presenters and the participants and the organizers for this amazingly interesting seminar, which provides very beautiful insights into not only the costs of the fluctuation and volatility of the currencies when traded in dollars, but also give some sketch of potential solutions, also taking into account, you know, the network analysis of the trade. So there is actually a complementarity between the different studies that have been presented, and I'm very appreciative of that. But as you have just mentioned, one of the issues for the success of central bank digital currencies as a solution to the problems is the insufficiency of the political will. Because the way we understand this solution, it is to sidestep all of the financial costs related to trading in dollars while trading with one another in a way that the dollar is not necessary. But now, just beyond the political will, I think what is most important to have a long-term strategy that is driving this shift to digital currency. So my question regarding that will be, is there beyond the divergence of monetary policies and the political orientation of the countries today, any long-term vision of the benefits of you moving to this new technology as a way to sidestep the dominance of dollar and the euro as reserve currency, and of course avoid the costs that are related to that among BRICS countries?
Does anybody want to answer, Yaragina? Srini?
Okay, thank you very much for your question. The thing is that we have a fruitful results and the historic experience of the usage of a single, to a certain extent, the digital currency for the Common area, for the countries that were united within the Soviet Union and its partners, let's put it like that. And it is the project that was backed by the experience and activity of central banks of the member countries, such as Czech Republic, Slovak Republic, Poland, Hungary, Mongolia, Vietnam, Germany, that was the Eastern Germany participation. And for more than 25 years, this currency was successfully used. And as Professor Joya Josie has mentioned, the political will and the political unwill just didn't give the opportunity for these countries to move forward while using this digital currency, because some of the countries of the Central and Eastern Europe has become the members of the European Central Bank, and that was the kind of the conflict of interest. But I would like to refer to the already existing just project that has a positive result, and we consider that just going along the road of the harmonization of the relations within the sphere will give just positive results also to BRICS countries. What we need, the political will, the functioning system of central banks, and the harmonization of rules. And that's it. And it's just the only one aspect. It's just the aspect of the political will. If there is no problem of introduction the digital currency to the world, let's put it like that. Firstly, within BRICS, and then with all other countries who would like to join us, developing countries. Because at the moment, unfortunate political will probably is not very successful for the usage of the well-known reserve currencies, such as dollar, euro, and some others. And to avoid these political, financial, and other risks by using that, it's a good possibility and just rather favorable opportunity for our countries to introduce this digital currency. Thank you very much indeed.
Thank you, Regina. We have one more question from Henry Omiat. And he wants to know, he's not clear about how central banks are thinking of intermediation because of the retail CBDCs will bring disintermediation. Krish, do you want to take that question?
Sure. Thank you, Henry. Thank you for joining us. I touched on it slightly in my presentation about the differences between the retail CBDC and the wholesale CBDC. So I think David also spoke about the different types of CBDC models that our countries are looking at. Like South Africa, Project Coca is focusing on the wholesale side. And so with the wholesale side, there still is a strong role for the financial sector to be involved and act as intermediaries in the chain. My presentation spoke to the retail CBDC model and the central role that the central bank can play in just controlling or managing governance and the regulatory processes, and that could be managed through what we call the bridging platform, and that could then be a new structure that perhaps exists within BRICS or whichever new formation the sort of system could use. But it's up to our countries now to decide which sort of model we want to pursue and how do we bring these things together. Our role here today was just to try and present the options that are on the table and explain how these new technologies differ and what are the opportunities for us if we were to go down these different paths that we've spoken about.
Thank you very much, Krish. Andre, I hope you were able to appreciate that, but we have come to the end of our time limit, and I must just thank everybody for your participation, and especially the discussants and the people who raised questions like Paulo and Alexis and Henry. It was very good, and it was very good to see all the people attend this webinar. We will now incorporate as much of the comments as we can into the final report, and we will make recommendations, and they may not necessarily focus on CBDCs, but we will think about that and especially look at the working groups within BRICS. We also suggested a working group for the G20, for the G20 countries to think about it. And yes, I think we will finalize the report and then make a final submission to the sponsors. And I would like to take this opportunity of thanking the sponsors and the hosts of this workshop, the sponsors of the National Institute for Humanities and Social Sciences, the South African BRICS think tank group, who kindly sponsored and funded this project. We'd like to thank the University of Nelson Mandela, the Vice Chancellor, the Deputy Vice Chancellor, and Professor Ronnie Kwadi for his great support and in hosting this. We'd like to thank some of the researchers like Chris Chetty and Nwabisa, and we'd like to thank Shaojing University, ZIBS, Professor Yuan Dai for her hard work and for to Professor Wen Wu, David Wen, for his contributions, and for the Zibs University in allowing us to, for hosting my participation, Professor Wen Wu's participation, Professor Yuan Dai's participation, and we will now spend the rest of the time in trying to finalize the report before making our submission. And for that, we will have discussions with Oriel Nimak, who will give us some directions as to how we should go about doing that. So I thank you all very much and appreciate your participation in this workshop. Thank you and bye-bye.
Thanks, everyone. If we can just all turn on our cameras very quickly, and we'll take a group picture. Oh, wonderful. Thank you. I'll take a picture. 3, 2, 1. Best smile. Okay, all got it. Take another one.
Bye-bye. Good luck. Good luck. Bye-bye. Shall we make a new picture?
Yes.
One more, last one. Okay,
Okay.
in 3, 2, and 1. Okay, I've got it. Thank you, everyone.
Okay, thank you. Bye.
Bye-bye.
Thank you. Bye-bye, Paulo. Thank you for
Bye-bye.
participating.
Bye-bye.
Thank you.
Bye-bye.
Thank you, Alexis.
Bye.
Bye.